verify that it has, in fact, gone live. And we are live on Facebook. So we're good to go.
All right. Welcome, everyone. Thank you for joining us with our bi-weekly episodes of Smart With Your Money Live. I am Chase Peckham. I am the Director of Community Outreach at the San Diego Financial Literacy Center, the education arm of DebtWave Credit Counseling. I am joined by my compatriot, Felipe Arevalo, and today we are going to discuss credit scores, myths versus reality. And before we jump into that, I do want to mention a couple things. You will notice that if you have any questions, please feel free to go ahead and start asking those questions in the chat. You'll notice that it goes right to us. If you are watching on Facebook Live, please go ahead and type in any questions you have there so we can get right to you, because we will be answering questions. And then we might even answer as we're doing the discussion, but we will for sure have time in the next 15 minutes or so after we end. It's a short program. It's only about 20 minutes, just because we want to obviously get everybody in and get everybody out so we can value everybody's time. And also we will go over any questions you may have, including if you have any questions that are kind of outside the credit scores myths versus reality. So with that being said, Phil, credit scores myths versus reality, we've been doing this for over 12 years, well over, I mean, thousands and thousands of presentations and workshops and conferences. And boy, if every year, every presentation, there aren't total misconceptions and myths versus the realities of credit scores and credit reports.
Oh, we get them all the time from constituents, all different parts of the county where we present, all different age groups. And it's good to be able to create this and be able to put this information out there so that everyone can have a better idea of some of the myths that are out there and some of the things that people are not sure but might actually be true. Just kind of knowledge is power, and you want to make sure that you have the best information available. So we can get started here, and we'll start off with number one. And the first slide is always a little tricky. There you go. So myth one is you can hurt your score by checking your own credit.
This is the one. This is the doozy. Always do we get this.
We get this all the time, and it is not true.
Not even a little bit, Phil.
No,
not even a little bit true.
You can check your credit as much as you want. You know, it's something where they've even made commercials about it. You know, we've seen the commercials with one friend sitting on the bench and they're checking their credit, and the other friend throws their phone in a pond because they're trying to save them from ruining their credit. And as silly as the commercials are, they are accurate in this case. And you can check your credit, and that what that will do is it'll create a soft credit inquiry. And there's a very important distinction to make between soft inquiries and hard inquiries. And you'll still see the credit pull on your credit report, but you're going to be the only one seeing that credit pull. It doesn't get sent to lenders. It doesn't get sent to any of the different credit score calculating models. It's just there for your information. Now, if you go and you start applying for credit and all of that, and you create hard inquiries, you know, as we went over on the credit score presentation a couple weeks ago or a few weeks ago, that can have a negative effect, minor, but a negative effect on your score. Whereas soft inquiries, you checking your own credit, do it as much as you want. Right now, due to COVID and the pandemic, you can check your credit report up to weekly
for free
on annualcreditreport.com for free. So, you know, do you need to do it every week? I don't know that you do.
That might be a little overkill. I don't think a lot's going to change.
But, you know, you definitely want to, you know, be on top
of it. Be diligent.
Of it.
You want to be on top of it. And just so everybody knows, we use these technical terms, inquiry, all that really means is that's just showing that somebody has looked at your credit report. Because those, as you guys know, these credit reports are marketing. The credit bureaus are marketing companies. They sell our information, our financial information, to outside entities, and that's why we get all that junk mail. So the great news is that when you look at your credit report, you can see it at you can see who's looking at your credit report. And if you're pulling yours, that means that's a soft. So just so everybody knows that it's those technical terms can be a little bit, but inquiries is just look out for them. Not a big deal. In fact, you can even, just for your own knowledge, check and see how many times you've pulled your credit over a 2-year period. You can see all those different organizations that are looking at your credit just because they want to send you junk mail and try to get you to transfer your balance or whatever that might be. So go ahead, take a look. Not going to bother you at all. So,
and we definitely have a timely question on this one before we move on is how often is it reasonable to check your credit?
I honestly, in this time, I would say once a quarter, probably. And it really also depends if there's anything bigger that you need to do, like you're looking into buying a home or you're thinking about buying a car or something like that. You're thinking about opening up a new line of credit to do something. That's when, be a little bit more diligent. But once a quarter in this day and age, especially just because there's so much identity theft, and not only that, but just misinformation, that there can be just identity mistakes. Literally, especially if you have and we've talked about this before, if you have a relatively popular name and a common name, that can happen quite a bit. Yeah. So that's a good question. I would say normally I would say I check mine once twice a year, every 6 months, but lately we've been checking a little bit more just to be a little bit more diligent, and the fact that it's free, and a lot of your banks are going to let you do the same thing. Good question. What's behind door number 2 there, Phil?
All right, number 2, when I pay off a past due account, such as a charge-off or a collection account, it will show paid and no longer be a negative. And we know.
What do we think, Johnny?
We know that is not true, although part of it could be.
Some of it is.
That's why you get the false start. So so when you pay off the past due account, it will get changed. If it gets changed to paid, that's better than showing that you still owe the money. But that doesn't mean that it's necessarily going to disappear off your credit report. Things still can stay on your credit report, and it's still going to be on there, and it's still going to look like a negative. And things stay on your credit report for up to 7 years. At that point, then it would drop off. And that's not to say that as time goes on, that paid off account is going to, affect you less and less, but it's not going to just disappear because you paid it, unfortunately.
Right. The bottom line is that nobody's making anyone put this on, and it can be pulled off at any time. So if you get into that situation where you are paying off a collection account, and we talked about this a couple of weeks ago, is make that a part of the deal. You're paying off this account and you would like that removed from your credit report. Then if it's not there, it can't count against you. Yeah, and they can pull it. Nobody says they're
part of the negotiation. It'll allow you to remove it. And then at that point, never happened.
It's not there anymore.
Yeah, it's not there. All right. Let's see. Number 3 that we have here. The credit bureaus are a branch of the government and their records are infallible. And we do hear this.
Yes. And I got to tell you, this one makes me laugh all the time. And I don't mean to laugh, but it's amazing how often we get this, that people think that the credit bureaus, that Equifax, TransUnion, and Experian are government entities, and they're not. They are publicly traded for-profit businesses. Again, we talked about this at the beginning. They're there to sell information. They're not there for us to help guide us with our information, but it is our responsibility to take a look at it. And as we just talked about a few seconds ago, that identity theft and there's mistakes and those kinds of things. I mean, there are literally millions and millions and millions of credit reports out there and credit profiles. There's no way that they're checking up on all of these to be able to make sure that their information is correct. That information is sent to the credit bureaus. They put it up. It is unfortunately, and by no fault of our own, it's our responsibility to take a look and make sure that those accounts that are on there are ours. And if they're not, we need to dispute them.
Yeah.
But by no means. Now, that being said, right, Phil, that they have to follow all kinds of guidelines that the government does put. There are laws they need to follow.
They do have regulations and things that they have to follow. And if you dispute things, then there's a process that they, then you can get things removed if they're inaccurate, but you have to create the initiative to go on there and request for that process to start.
In fact, we covered that at length a few episodes ago. So if you'd like, you can go back and you can find that on our website.
Definitely not true. So we'll move on to number 4. And number 4 here we have closing an account will help your score. And we hear this one often as well. And that's not the case. It's something where the act of closing the account could actually have, depending on your financial situation. And we get this question all the time when people say, if I close out one of my credit cards that I haven't used in a while, what's that going to do to my credit? And it's impossible for us or anyone really to answer that, because there's so many other things that are going along with your credit, and the closing an account can have a significantly different outcome for one person as the other. But the act of actually closing the account itself doesn't mean that your credit score is going to go up.
Right.
What they can do is if you have a balance that you're carrying, it can actually reduce your available credit limit. It will reduce your available credit limit, and it could increase your debt to available credit ratio, which we went over in a previous presentation, is the second highest factor to your credit score.
Right. Those 5 factors get affected by if account is closed. But if you're a person that has 5 credit cards and you don't have many balances on them, and then this credit card you're just not using very often, it's better to close it yourself than it is if it's inactive, and eventually the bank is going to say, you know what, it's inactive, we're going to close it for you. So it is okay to close an account every once in a while. But if you are somebody that has 2 accounts, let's say, or 3, and you have a little bit of debt that you're trying to pay down on those, and then you close one that has a lot of available balance there, then closing that's probably not a great idea. And one other thing we will mention is, if it's one that is older and you have had it for a long time, it's got a lot of history, you might want to think about if you want to close that one, because history does matter. It's only 15% of your score, but it does, it's, again, it really depends on your situation, but look into it, do your homework before you just go closing an account.
Yeah. And we've had people say, I got declined for a credit card, I'm just going to close one of my other ones that I don't use and go apply again. And that's really not very productive.
Yeah.
That's
get that back.
The opposite effect at that point. So closing it should not be I'm going to close it so that I can jump my score up a little bit more.
100%. I mean, the only thing is if you look, let's say I'm in an age where I've had credit for 25 years, and I have a credit card that I still had when I got in college, and that credit card isn't doing anything for me anymore. There's no special benefits. It's got a high interest rate, whatever it might be. And I've got 4 others that I also have a long history with. Then I can think about closing that, just because I'm really not using it, and I'd rather me close it again than the bank close it.
Yeah. Perfect. So we're moving on to number 5. And number 5 is, if I build enough good credit, it'll offset my bad credit and make me credit worthy. And, for this one, we have the false start again, because it's not.
That rep is busy.
Yeah, I know. It's not necessarily, it's not true, but there is some truth to it. And it's an important distinction to make, is it will help your credit, but it won't eliminate your bad credit history. The bad credit history there, it's there. And with time, as you continue to make more and more good credit history, and that negative, whatever the negative was, starts to become older and older and older, you will see a shift with your credit score, and you will see it increase, but it's a slow, steady climb from some kind of negative scenario.
It's definitely not an offset, right? It's not offsetting penalties and let's do the down over again, right? If you want to use a football term. But again, all information as it gets older carries less weight. the most recent information on your credit report is going to carry the most amount of weight when it comes to your score. So the older something negative gets, those good habits that you've created, those good accounts that you're building, those payments are on time, you're paying down your debts, you're going to build that credit score back up because that negative information is getting older. And then eventually when it drops off, it'll be like it won't get there. So it may not be like a major 100-point jump because you got this new great account, but it is going to steadily increase.
Yeah.
So keep working.
Keep working at it. Eventually it will help your score.
Absolutely.
So on to number 6. Number 6 is, it is illegal for creditors to take a negative accurate listing off my credit report. The law requires that these items remain on your credit report for the last 7 years.
This is where there's a lot of confusion.
There's a lot of confusion, and that is not true. And the reason is, the reason for the confusion, I think, is the similarity. It just depends a little bit on how you word the explanation. Now, the law requires that after 7 years, things fall off of your credit report.
Correct.
It doesn't require that they stay on for the full 7. So it's just a little bit of a terminology. It's one of those where, the terminology or the grammar really matters. And, it's just because it's on there doesn't mean it has to stay on for the 5. As we mentioned, we mentioned in the previous Swim Live, when negotiating a debt that's been in collections, you can make this part of the negotiation to have that removed. And creditors they can remove things if they so want to. They don't have, once it's on there, they don't have to leave it on for the full 7.
Absolutely. And just, we can reiterate this, that there is no law that tells any company that they have to put our information on our credit reports. They purely do this because they would like as accurate of reading as when they're pulling credit, when you're trying to apply for something, you or I, whoever it might be, they would like the most accurate information. So they want to report information as well. But that's why you'll notice sometimes, and you'll see commercials about it, where your credit score might be different based on the different credit reporting agency. And that's because there are some organizations that report to some that don't report to others. So again, there is no law that says that anybody has to put anything on, and there's no law that says they can't remove it. Yeah, so again,
it's very similar to maybe like the cell phone industry. They're not going to report your positive payment history, for the sake of doing it. But if you stop paying and you don't pay the early termination fee, and they're trying to find you and they're trying to get their money back, at that point they potentially could go ahead and put the negative information onto your credit report. It's not that they have to, it's that they're trying to get some of their money in return.
Without question.
So it's something to keep in mind there as we move on to number 7. And we have one that's true. We have one right there at the end. You have to use credit to have a good credit score. Yeah. Now, this is another one where the terminology really matters. You have to use credit. You don't have to carry debt. You don't have to be in debt to build good credit.
Absolutely.
But you do have to use your credit. And the reason for that is the way this credit scoring models work, and you can go back and watch those, is so much of it depends on payment history, on the usage, and if you don't have anything for them to judge your credit worthiness on, then at that point there's no way for them to make a determination on whether or not you're likely to pay something back if there's no history there.
Well, think about it, Phil. I mean, and I'm sure everybody here has loaned money to people, right? And they have, I bet a lot of people have loaned money to people and then didn't get paid back. And we learned that the hard way, right? And we know now, if that person came back to us again and said, hey, can I borrow some money? You're going back to this report in your mind and you're going, man, this guy person didn't pay me back. Why would I loan them money again? And it would be like somebody that you don't know coming up to you and asking to borrow $100. You don't know them from Adam. You don't know if you'll ever get paid back. Why would you loan them money? And that's basically what comes down into this is you have to show these people that you know how to use the credit if they're going to give you a loan. And that's as simple as what this is for.
Yeah, really, it's just a matter of, is there information there for them to
But
use
again,
to determine?
as Phil said, you do not have to go into debt to do this. It is not a good idea to go out and buy a $25,000 car because you want to build your credit. It's,
Right.
that's just not a good idea. You can, using a credit card, using it to pay. I mean, literally you could use it once a month. You could buy a tank of gas with it. You could use it as a cell phone bill payment, pay it off every month like you do anyway. And that's it. I mean, you're making positive payment history and you're using credit. You don't have to, you don't get any brownie points by paying off a big chunk of debt. You're not. Unless, of course, you've got a lot of debt. Now you're paying down those balances, but that's a whole different story.
Yeah. So, hopefully this was helpful. We have,
those are our top
questions.
7, and there are more, but those are our top 7.
Yeah. We want to, let's see. I have a question here. It was earlier in the presentation. We didn't have a chance to get to it. But unfortunately, now I don't know what it was referring to. What resources do you suggest we use to establish what you were discussing? Unfortunately, I missed what part of the presentation that came in. So if you please send that one back, I would be more than happy to answer it. In the meantime, we have one over from Facebook, Chase. We have one here. How can you get proof that a collection agency payoff will be taken off your credit report? I understand negotiating, but they can say one thing and do another, right?
They absolutely can. And unfortunately, that's the bummer of it. But before you do anything, when you're working with a creditor, especially any creditor, but especially a collections agency, is you get everything in writing. You get it first class mail, whatever it might be, but you get it in writing. And if that doesn't happen within a month or two, you can send that information to the credit bureau and let them know that was supposed to happen. And that you had that deal with the group. Unfortunately, when you're dealing with collection agencies, you're not always dealing with the most honest of people. Now, that's not to say there aren't really good collection agencies that follow the letter of the law, but like with any industry that we find ourselves working with, you can have some bad apples.
Yeah, and it could be something where maybe it's not even malicious. They're trying to get the money, they get the money, and now they're like, okay, that's done. And then not go through the extra step of actually going through and requesting for that to be removed. Right. We have another question here. Should we pay off a credit balance right away or wait for one billing cycle?
Oh, that's a good question. Actually, you can do whatever you like. There's 2 scenarios to this. If you had just bought something and you don't have any other balances on your credit card, and that is the only balance, there's no brownie points for paying it off as soon as you get the bill. As long as you're paying that bill within that billing cycle. So let's say the due date is, let's just say in this case, November 28th. You're not going to get brownie points by paying it off, except peace of mind maybe, for paying it off early, because you have a grace period before they start charging interest. It's only after that date that if there's any other balances sitting on your balance, that they're going to start with the interest rates going against you. Now, if you're carrying already a balance and you're adding to it, remember, only the purchase is going through that grace period. Any balance that's already there is accruing interest every single day. So the earlier you pay that off, the better.
Yeah. So if you zeroed out your account last month and then you can use your credit card, and then when the next billing cycle ends and they generate a statement, it'll have a statement balance and then a due date. As long as you pay at least the statement balance or more by that due date, and you zero it out again every month, then you won't be getting
same as cash
finance charges. It'll be same as cash, and that's when you can benefit from things like reward
miles
points and miles and all that fun stuff.
Absolutely. That's when a credit card can really work to your advantage, is if you're really on top of it.
It's a great question, though. Let's see, any other questions?
Is there anything else, Phil, that you get that are myths that we run into that off the top of your mind, the ones that we didn't cover?
Off the top of my head, as far as credit, we get a lot of budgeting ones too. But as far as credit goes,
those are the big ones.
Those are the big ones. I think there's some that go with student loans. Some people feel that I'm not in school, I have no payment due, so my student loans won't be on my credit report.
Right.
And
they're
that's
not charging interest either.
right, and that's false. As soon as you take out the student loan, it's going to go on your credit report. Now it will show that you're in school status, you don't have a payment due, and all of that. It'll show you're not going to fall behind or anything, but they will be showing on your credit report. And I think that's because people have that grace period while they're in school with their student loans. They feel that they have that same grace period where it's not showing up on their credit report, and that's inaccurate. It is showing up. And if you have student loans, or you've taken out multiple student loans, you may have one semester worth of student loans and have 3 or 4 individual student loans, because there's different types of loans, and things like that. And each one will be reported separately.
Fantastic. Do we have any other questions out there that we can answer? Even if it's not directly about the topic we're talking about today, we can do our best to answer those for you if you have something pressing on the top of your mind. And a good idea too is if there's a lot of, somebody has one?
Yeah. Who can you ask to remove a negative credit from the report? So I think the question is, who can you, if you see something wrong with your report, what do you do about it? And really, if you pull your credit report on annualcreditreport.com, and it'll link you directly to get your credit report from the Experian, Equifax, or TransUnion, whichever one you select, or all 3. Right then and there, while you're viewing your report, if you identify an error, or you identify something that doesn't belong to you, you can dispute it and start the dispute process right then and there. It doesn't take very long. Last time I checked, they had character limits, so it's not like you get to write a bunch even if you wanted to.
Right.
And you can start the dispute process yourself right there. If it's something where it's an error, and you can reach out directly to that creditor, whether it be like a credit card company or collection agency, and ask them to remove it. If it was just some kind of mistake, clerical mistake, like all of a sudden your credit card shows that you went past due last month, but you have record and you show that you didn't, you can reach out to them, and they should be able to
absolutely
take care of it. Especially if it's an
especially
error.
If it's the original grantor credit, if it's your current credit card company or your bank, if there's a mistake, they're going to fix it pretty quick. Collection agency is a little bit different animal.
Yeah, and there are, so yeah, hopefully that helps out. But there are others, little specific scenarios. But for the most part, I've had errors on my credit report before, and it literally took about 5 minutes to start the dispute process, and then it was just a matter of kind of just keeping an eye on my in my email and just waiting for the dispute to complete. And I got a thing, sorry for the inconvenience, it was removed, here's another credit report, verified it was gone, and it's gone. It never popped back up. So it's actually a pretty easy process to get going.
And we should probably put the information for Crystal up there too, if anybody wants to discuss and have somebody help them look at their credit report, decipher what's going on, talk to them about their credit scores. We have one right there that Crystal Williams she's phenomenal. She'll sit down with you, discuss it. I mean, obviously over the phone, but she can go over that whole thing with you and help you kind of figure out what's on it.
Yeah,
and really help
give
you
tips on what to do and that kind of thing. Yeah, I think it's a great resource. It's there for the community at large, so anyone can reach out to her, and get more information. And more information is always a good thing.
Are there any more questions, Phil? Have you seen? I don't have any coming my way.
I have a chat here.
I think people think you're just a lot smarter than me because nobody asked me a direct question.
I think I started it and I have it set to email host only.
Oh, maybe. Oh, that's why. Okay.
I think, yeah, we should have made you a co-host.
Oh, that's okay. You know what? That's absolutely fine. I mean, one way or the other, we both can answer this information.
Question from Facebook is, what is your favorite Halloween candy?
My kids asked me they always think I just don't eat candy. Peanut M&Ms.
Yeah, I think if we're going specifically Halloween candy, I think I like candy corns, and not because they're great, but I think the scarcity of them, because you only get them around this time of year, makes them taste so much better.
To answer your question, Anna, yes, this is a nonprofit, 100%, 501c3.
Yeah, and we do this every 2 weeks. So if this is your first time joining us, we hope that you'll join us for more. And we have a couple different resources available. We have our podcast. It's a weekly podcast where we talk about different things in personal finances. We have experts on and get their opinion and get their feedback on some topics that maybe we don't specialize in or we don't deal with on a daily basis. So you can get that anywhere you get your favorite podcasts. And we have one coming up here next or 2 Wednesdays from now. And that should be a fun one. So
this one's going to be a fun one. 5 holiday budgeting tips, right?
Yeah. And with the holidays coming up, hopefully you've been saving and you started earlier in the year saving for the holidays, because if that expense is coming, it's usually a big one. But, give you guys some tips to how to better prepare for those.
Absolutely. And we have one more thing we'd like to push out there for anybody that if you ever have wanted to work with a financial planner, a certified financial planner, and you haven't had the chance, you just don't think that there's any need for it, but you just aren't sure about your 401k or your 401(b) or you just want to talk about, your budgeting, you can do that. We have a program for it called our financial opportunity clinics. We're doing them virtually right now. So go ahead and you can go to sdflc.org and you can find out information about that. And that's all free. Perfect. All right, Phil, this was fun. Right. I love these. It was fun.
Yeah, I like doing this.
Thank you, everybody, for coming. It was great. I'm glad if you have any more questions, we'll stick around for a couple more minutes. But we had a great time.
Yeah, appreciate it. Thanks, everybody, for stopping by.